Hello, I'm Diane Trees. Demographic shifts like the longevity of baby boomers and the lifestyles of millennials are profoundly affecting multiple areas of real estate markets. Retail, commercial, industrial, residential, what's hot and what's not? Rebecca Wilson, shareholder and land use attorney at the law firm of Lowndes, Drozdick, Doster, Cantor, and Reed, joins us now to talk about emerging trends. Becky, welcome to the show.
Thank you so much, Diane.
You are a land use attorney and you're incoming chair for the Urban Land Institute. What drew you to this kind of practice?
Well, a lot of people don't know exactly what a land use attorney does. So I have the opportunity of helping developers and landowners, along with their team of architects and engineers, put together development packages. And we then go and have those approved by the local government. It involves a lot of outreach to the neighbors. So it's a lot of fun because my practice is a little bit law, a little bit public relations, and a little bit politics.
I would say a lot of politics with that, yes.
Increasingly.
Yes, yes. Well, the Urban Land Institute puts out an annual report on emerging trends every year. 2016, the report held the Orlando area for overall real estate prospects. I think we were ranked like 40th. Coming into 2017, they ranked us just outside of the 20th level. That's a big jump. Becky, what do you think caused us to move so much up in the prospects here?
Well, Orlando has done a great job of diversifying its economy. And not only have we diversified it, but we've also used our platform of tourism to promote our economy. And as that word has gotten out, we are beginning to draw more institutional investors, which hopefully in the long run will create a more sustainable and less volatile real estate market.
Urban Land Institute, your incoming chair, did you want to just explain a little bit about what the institution is so our viewers know?
Absolutely. Urban Land Institute's mission is to bring together the different disciplines that surround real estate development so they can share ideas on best practices. And not just the best practices to make money, but the best practices for sustainable real estate development. And they take on really difficult issues like housing affordability and environmental concerns.
Looking at the real estate market, and I always think of it as in different sectors like that, let's talk a little bit about each of them and maybe where we are, if you can give us a little assessment across Central Florida. Starting out with the industrial market, what does that entail and how are we doing with that here in Florida?
Well, the industrial market is hot across Florida, specifically in Central Florida and then also in Miami. And what we're seeing is the desire to have industrial storage and warehousing in more infill developments. So we are providing this industrial warehousing for the retail model that's now shifting to bring products for delivery closer to the market. It's also creating, from a land use perspective, a little bit of a struggle between a traditional industrial kind of undesirable use co-locating with residential uses.
The industrial market has been strong for the last year or so, I believe, but it wasn't always like this. And do you attribute that a lot to the changes in the way we are doing our retail, buying and selling?
I do. I really attribute it to two things. First, as mentioned, I believe they now call it the click and order way in which we purchase everything from cars to toilet paper online, but also as the real estate market heats up again, there's a need for goods and services to be available close by.
Let's talk a little bit about the office market. Where are we here, and especially in the downtown area, which I would think would be the biggest need for office space right now?
I think the office market, especially in downtown Orlando, is in a little bit of a chicken and egg cycle. Orlando has a lot of strong attributes that would draw the relocation for large companies to our downtown. However, they don't want to move here if there's not the availability of office space. On the other side, the lenders don't want to lend you money to build a new high-rise office building until they know that you have leases signed for that. So we're in a little bit of a standoff when it comes to downtown office development. However, we are seeing in the submarkets the development of some new mid-rise office buildings. I think the KPMG is a great win for those people that are not aware of that. That is the new training center that's located on about 55 acres in Lake Nona that is bringing people for training nationwide and I believe internationally also. And that was an example of how Orlando was able to leverage its tourist industry into bringing that type of business to town. They chose this location based on its proximity to the airport and to the theme parks.
Right, right. The residential market, let's talk a little bit about that. Single family homes, how are we doing?
So the single family market is strong. What we're seeing the most interest in are smaller lots. That's both because it gives you an opportunity to, at a lower price point, get into the single home market. Again, the sub areas that are particularly hot for new home sales are Southeast Orange County and then Horizon West.
With the rental properties, multifamily units, rents seem to be just going up and up. How are we at a tipping point yet where that's going to change?
Well, that's interesting. So if you look at downtown Orlando right now, you can see there are a lot of cranes up downtown. Yes. So, and there have also been a lot of new apartments open. So right now there are approximately 2,000 apartment units either under construction or that have applied for approvals with the city. And what we're seeing is that the demand, about 60% of the demand, needs units that are priced at $1,000 or less a month. So I think that it will be interesting to see if all of these in the pipeline are able to withstand that type of rental pressure, along with the rising cost of construction.
Right, right. I saved retail for last. You mentioned it briefly before. Things are changing in that world so very much. Do you think that the days of the malls, we won't see that quite so much?
What we're seeing is more of a shift towards retail/entertainment, something that would make you want to come visit the store or the location as opposed to purchasing it online. We're also seeing the traditional large retailers such as Walmart evolve so that they have online stores that you pick up locally, and then we're seeing Publix, who has partnered with the delivery app Shipt, where they are using that to deliver, and then and those are the large brands.
Right, big changes.
But some of the smaller brands, Tom's that produces the shoes, or Patagonia with the outerwear, they're turning their stores more into a lifestyle experience where you come in and you're buying into kind of the lifestyle that they're selling, as opposed to just a showroom for what they're selling.
Are there any issues, policies that you're following that you think may impact any of these areas in real estate, say in the next 12 months or so?
Well,
or are there so many you can't?
Well, I think one of the policies is certainly immigration. 25% of the labor force in construction is foreign born. So as those rules become, let's say, muddled or confusing, that will certainly impact the availability of the labor market. And then the second would be, I don't want to say just interest rates, but probably the regulation of banks and lenders overall, and whether that is going to loosen up under the new administration.
I don't know. Yes. You mentioned before about the changes in diversifying our economy and the benefits. In your opinion, and this is looking long range, do you think we've managed to diversify enough that when the next down cycle comes, and it will, when we have a decrease in the construction again, that we will be able to withstand it a little better, that it won't cripple us quite as much as it did the last time around?
Well, certainly Florida's economy, both in Central Florida and overall, is dependent on real estate. But we've definitely made great strides in investing in education. Certainly having UCF downtown will be a big help for our downtown. The simulation industry, and also increasingly putting money towards tourism, the airport, and all of the new public infrastructure should help when the downturn comes again. I would also say that this expansion economy that we've been in for about 7 years has been incredibly more cautious than previous expanding economies. So hopefully, when there is a dip, it won't be as dramatic as what we saw before.
I hope so too. Thank you, Becky.